everyone. I'm not quite sure how we're going to follow that session. The analogy to the ministry was absolutely fantastic. Very well done. My panel today, I'm pleased to be here with, and each of you ladies leads innovation from a different vantage point. So market infrastructure, fintech, intelligence, and global institutional banking. Perhaps we could just take this time to do a quick introduction and share how your perspective has shaped what you see as the biggest shift coming to finance in the next few years. Nadine, we'll start with you.
So good afternoon. My name is Nadine Chakar. I lead the digital products at DTCC. Just as a matter of introduction, DTCC is the largest depository in the world and the depository for the US markets. Do you want me to go further? Or?
Yeah, please. What's the biggest shift coming to finance?
So what we're working on right now is to assist, if you will, with the tokenization of the US markets. DTCC custodies about $100 trillion in US markets. Here we go, thank you. And we also settle up to $4 quadrillion a year in settlement. So very large numbers, and we believe that if we can innovate and tokenize these markets, that will make it a major boost, if you will, for finally bringing finance on-chain and modernizing the way we create, we consume financial products. So thank you for having me today.
And how many zeros are in a quadrillion?
I was going to ask the audience that, but I remember the first time I read it, I did have to Google it, and it's 15 zeros.
Wow. Okay, great to know. Thank you. Sunidhi.
Thanks for having me. I'm Sunidhi Basan. I'm the founder and group CEO of FinStreet Limited. And FinStreet Limited is building what I believe to be the first-in-class digital market infrastructure that spans issuance, custody, trading, and settlement across global private and public market assets. And I believe that the next shift in the market is going to be that capital needs to be global, and that there's going to be no difference between the interoperability between private market assets, public market assets. And it's not just comparing crypto with the traditional finance, it's allowing for the various strategies of assets alongside digital assets to operate on a digital rail as well as on one infrastructure.
Perfect. And Isha?
Well, first of all, congratulations to those who've made it to day 4. I think it's been a hectic week, so I'm really pleased to see everyone who has made it, and thank you for your generous time. My name is Isha Chander, and I'm with JP Morgan Payments. I cover the CEMEA region for the bank, for payments specifically, and look at driving growth as well as transformation as the Chief Administrative Officer. I think the biggest shift, and this has been a topic throughout the week, and we've all talked about AI a lot. Over the last 18 months, companies of all shapes and sizes have been experimenting with AI, what it can do, looking under the hood, thinking about different things they can do. But I think over the next 2 years, what's really going to pan out is the need to develop use cases, because I think there will be pressure across the board from the boards themselves on the leadership on when can you deliver results with this thing called AI. I think it is still a bit of a mystery as much as everyone thinks they understand it. And I think people will need to realize that at the end of the day, it's not just AI that can deliver benefits, it's also using technology in a smarter way. I was talking to a couple of treasurers yesterday at our clients, and they're not just thinking about AI, they're even just thinking about how to use their ERP systems, how can they use macros in Excel to deliver better outcomes. So I think we need to get very use case oriented on AI, and we definitely will see that shift. So I'm hoping in 2 years' time, Gina, we're talking about these are the 5, best use cases in the world of financial services and specifically payments.
I definitely feel that with AI across this week, it's been really difficult to pinpoint some of those real life use cases. Less so, though, in the tokenization market, where we have a lot of real life use cases going on. Nadine, I'm just going to spend a couple of minutes with you. And the DTCC right now reshaping the backbone of financial markets. As tokenization and digital assets are maturing, what perspectives do you think a diverse leadership brings to decisions around building trust and resilience into global market infrastructure?
That's a great question, and I believe at this point, I don't know if it's maturing, but it's moving forward in the right way. We're starting to get more clarity from a regulatory perspective, and this is no longer a technology issue. I think we've cracked the technology. We know it works. But the thing that you said, it is right now all about governance and trust. And it's, and this is where diversity comes in a big way. You need diversity of thought. And what we're doing also in this environment. So when you're a financial services company, DTCC is on the extreme of that. We tend to be highly regulated. We've got systems that go back decades. You've got people that have been there for a long period of time. And what you do see is sometimes a culture clash between like, this is good, leave it, don't break something that works. Or you've got the anxiety of like, hold on, there's a fear of missing out. The world is changing. We need to jump on that bandwagon. And then if you're a regulated institution, you're sort of stuck in the middle because you aspire to lead, you aspire to change the world, but you're limited with what you have. Now in the US, we've seen a massive shift these past 18 months with now our regulators really moving and partnering with the industry, if you will, to try to move forward. But and it's funny, I think we were sitting next to you and I was laughing when the question around the Minister of Education, right? So, and I was in another session yesterday, which same thing. They want people to go on and learn applied physics and applied math and applied this. But at the end of the day, we forgot the art of communicating. We forgot the art of negotiating and the art of bringing people together. And that is why diversity is really, really important in this. And it's all about right now making sure that we've got the right governance, the right trust. Yes, we work in a trustless environment, but at the heart of it, smart contracts don't look good in orange, which is, you still need to hold somebody accountable because we're dealing with institutional money. And this is where you have the generational shift where if it's my money, I'll go on any DeFi avenue, I'll do whatever I want to do. But when I'm responsible for somebody else's money, then it's more institutional DeFi. And that's where trust and governance comes in. So I think you're going to start seeing a shift. And I agree with the use cases, but personally, I'm sort of over the use cases. We need to start to execute. We need to start shipping products that are ready for consumption. They may not be great, and it's okay. We can iterate. We can get there. I mean, the financial markets that we're working on, and especially being from this region as well, they've been thousands of years in existence. We've been bartering and doing different things. Funny enough, when you go back to what we're doing today in DeFi, we're back to the future to a certain extent. Let's go out, let's experiment, let's put the products out. But once there's trust and governance, I think we can make them work.
You've kind of also answered my next question as well, but let's see. Where do you see the greatest disconnect between aspiration and execution when institutions try to modernize, and how do leaders close that gap? Is it just a case of getting out there and getting on with it?
I think it goes back to also culture in that generational gap, right? So we all talk a good game. We want to innovate. We just go out and don't worry about it. Failure is great. If you haven't failed, you haven't lived. If you guys work in any large institutions, tell me the last time any of you got rewarded for messing something up, breaking something, right? So there is definitely a disconnect between the aspiration, which is we want to be the best, we want to be innovative, and unfortunately the realities of where we deal with today. And if you're a publicly traded company, it's even worse, right? You don't have the money to wait 3, 4, 5 years for something to come together. You tend to put KPIs for today, not for tomorrow. You tend to look at everything from a risk-based lens. Some of the things we're dealing with today, there's just no roadmap, right? We're figuring out as we go along. What I love about this is it's really a community work. It's a work of love. Like, it takes a village. We look at this. I managed to put three sayings in one sentence, but it truly is. And that is where the disconnect is. It's where you want to be, but then you're faced with the realities of tomorrow. And the way to get over that is really start to build a culture that is more forgiving, that's more understanding, and try to move it forward. But I don't know about you guys. The last time I messed up, I'm pretty sure I didn't get a raise out of it. So
I love that.
that's where it goes.
Be more forgiving.
Be
Absolutely.
more forgiving.
And Sunidhi, from your vantage point, analysing fintech and emerging markets, what trends are you seeing that are bringing together those larger players, or even regulators are still underestimating?
I think there are a lot of inefficiencies in the market, and the regulators or the institutions are starting to see that. I honestly believe that tokenization, or in the future AI, tokenization, blockchain is not necessarily an experiment today. There is evidence that the large industry players are properly picking it up. You see, for example, our partners, BlackRock and Franklin Templeton, have already done tokenized money market funds, and there's others, asset managers that have at least tens of billions of assets on chain. And in 2030, it's already projected to be at least 1 trillion, if not more. Secondly, that private markets that are already 20 trillion AUM are still analog. And the fact that there is at least 1 trillion of assets, that's looking for maturity, that's looking for exit. And there is no one infrastructure other than just providing continuation vehicles for various investors to exit is not a scalable solution. And the fact that these products are distinguished between strategies and geographies is not necessarily strategic, but operational, honestly. So I think that market infrastructure is going to help in that immensely. And thirdly, and uniquely actually, the West has long, run the various infrastructures and regulation and trust and governance around that. And because of that, the emerging markets have now come to become structurally advantaged because, as also Nadine mentioned, there is no legacy system that they are, withheld by, as well as they are able to learn lessons from the various inefficiencies that are being placed or identified with the market today. And thus, they have the ability to re-architect on first principles.
And we've talked a lot on this stage today about those soft skills that a lot of us have, wearing the many caps that we all do. Fintech often succeeds because it sees human behavior differently. In your view, how can wider industry players adopt that mindset to build more inclusive and efficient financial systems?
Well, I think that what we've learned from the various fintech disruption or innovation or successes so far is that the systems cannot hold human behavior. And so fintechs, what they're doing is they are leveraging on what the humans or the clients or the market is expecting, delivering on that. And soon the institutions that are big tend to lose their position. And so I think that in order to stay inclusive, there's two things. One, for the big institution, large institutions to maintain their position should be open to adapting and open to recognizing the inefficiencies, as well as not try to retrofit everything into their own legacy system. Sometimes, disruption or innovation requires proper change. And, secondly, for the regulators as well, there needs to be some level of harmonization, that capital is capital, it's global. It doesn't matter whether capital sits in the US or in Africa, it fundamentally is what it is. And so the fact that there is each regulator that has their own set of definitions, process, and the way of expecting the participants to do certain things, if there is an open dialogue for the regulators and the market builders, as well as for the regulators to come and harmonize together, will go long term.
We'll all live in harmony. Isha, JP Morgan is transforming how global payments and digital infrastructure operates. What capabilities or technologies do you believe will most redefine how banks compete in the next 5 years?
I think within the transaction banking space, payment space, and I think my answer is quite simple, it's real-time payments and settlement. Cross-border payments continue to be extremely complex with a very, very long chain. It's expensive, it's cumbersome at times, and I think overall there's a lot of investment that's going in, especially JP Morgan, to try and make cross-border payments as easy as possible. At the end of the day, the market is demanding that. There's an expectation that we are able to deliver it. And there's a lot of investment that we've made in our Connexus platform as well, on-chain, 24/7, 365 days a year payments. And I think over the next 5 years, whoever is making cross-border payments very easy will have a competitive advantage. And it's a space that's worth watching.
In terms of innovation, it really only works when talent and culture supports it. You mentioned the big institutions earlier making mistakes, Nadine, but for you, Isha, what do you think actually accelerates innovation inside these big institutions, and what slows it down?
Yeah, and I'll touch on some of the stuff you said. I completely agree. I think when you talk about innovation, the normal parlance is, oh, well, you need to be allowing failure. But how do you actually do that in larger organizations? It's difficult, especially because I don't think there's still a definition of what how do you fail responsibly, right? And how do you actually create a test and learn so that you don't actually get into a position where people are failing, one individual is failing. It is an actual test environment which enables the option to actually trial different things and learn from it. But at the end of the day, I think in larger institutions, what works is leadership commitment and vision. When leadership steps in, sets ambitious goals and agenda, that is the biggest statement. But you have to put your money where your mouth is. So then you have to allocate the necessary resources as well, because that's when you really are, getting serious about innovation, right? And I think that's one thing I'm proud of working at JP Morgan, because I think we practice that. It's not easy. It's hard to innovate in larger organizations. I think you touched on some of the legacy systems, right? We are dealing with, you are literally building the plane as you're flying it, and you cannot mess anything, right? So I think that always is a challenge. I think the previous panel touched a lot on diverse opinions and diverse point of views. I think that is very important. In larger organizations, it's very easy to get into an echo chamber just because of the way organizations are. So making sure that you, at any given point in time, have a diverse point of view. I know it sounds obvious, we all talk about it, but how well do you actually execute on this is really important. Again, the tone has to be set from the top. I think these are some of the few things I would say are very important.
I love it. I even loved that one of the ladies from previously changed her whole career path based on some of the questions that she was asking herself. So I think sometimes it's nice to be introspective. This session, though, is called Leaders in Motion because influence is clearly shifting in finance. For all three of you, where do you see the greatest opportunities for new voices and not just new companies to shape what comes next? Nadine, we'll start with you.
Really across the board. I mean, we're rebuilding everything in a way from scratch, but also being very responsible and thoughtful, if you will, to ensure that we're salvaging some of the traditional way of doing things, because it is really hard when you're like in our situation or in JP Morgan. If we stumble, the consequences are huge, right? So you're absolutely right. A fintech has got the the flexibility, if you will, to hone in on something very specific and do it extremely well. And that's how you grow and you prosper. For us, we're in a slightly different boat where we've got to make sure that, and I think you said it, you're fixing the plane as you fly it. So we have to be very mindful of unintended consequences. And where the voices come in is at all sorts. It's in government, it's in regulation, it's in the boardrooms. Because I fully agree. And we've been successful at DTCC because our CEO, our executive management, our board are committed to making sure that we can reshape U.S. financial markets. But you can't do that if you don't have the regulators on board, you don't have your investors on board, your teams, right? Like that's a lot of change in your client base. Everybody wants to innovate until they realize how hard it is, especially in the work that we do. I'll give you a very simple example. If you're a fund manager or you're a bank and you manage your middle or back office, you've already plucked in millions, if not billions of dollars over the years building that technology. And a very simple change, right? We're moving from account-based, right? We've got brokerage accounts, we've got bank accounts, we've got this account, and now they're all being replaced by a wallet. Think through, if you're at JP Morgan, you're at DTCC, you're at any bank, any fund manager, right? The disruption that caused in the machinery that operates the middle and the back office, right? That becomes hard. So you need people from all walks of life to really engage. And listen, it's hard work, but if you believe in it and you believe in the goodness that it will provide for the next decades to come, I think we can get people to rally around that vision.
Thank you. Suniti.
I think, of course, already mentioned that there's global capital flows and global strategies that need to become a lot more fluid and cross-border. So I think just stepping aside from that, one infrastructure or market that I personally find very intriguing, other than what we are building, is prediction markets. And I believe that how expectations are priced and how this market will transform or evolve in the future, where economists or data scientists will start ascribing their risks to measure policy, inflation, etc., is actually very intriguing and interesting and a new domain where I am watching out for the voice.
Lovely.
I think that nothing more. I think you covered a lot of ground that I was going to say. I think the regulator side is very important. From a transaction banking perspective, we're also seeing that you need more prominent technology voice as well. I think when technology and product organizations work together in banking, especially on the payments end, you can build much better client experiences as well. And I think you can also move faster. So I think that partnership between those two organizations is really important. Client experience is something that has been in the retail in the context quite prominent, right? We all still go to our preferred marketplace, probably not just because of price, but also because of the client experience. And I think in the B2B space, we're yet to see that revolution come, and we take client experience very, very seriously. And I think in that process, you need that diverse point of view, and you need technology right with product, as well as a whole host of other candidates to kind of drive that change. Regulators, as I said, I completely agree. I think we're fortunate to be in ADGM ourselves as a Cat 1 license holder, and I think ADGM themselves are very, very progressive. And I think the more progressive regulators are, that will determine the competitiveness of those countries, those markets as well. So I think it's going to be quite interesting as regulators really play on the front foot.
And it's a nice segue actually to leadership. I would love to ask, what is one assumption about leadership in finance that you think is outdated, and what is replacing it? And we'll come back this way.
I think we've probably covered a little bit of this. Leadership can sometimes be seen as managing risk by avoiding failure, whereas I think that's quite outdated. You can't be covering your backside, for lack of a better phrase. You need to think about, as a leader, how are you creating a space where your staff, your people are able to come up with the right ideas. And also the best ideas, what's also outdated is the best ideas don't come from the top. Be open-minded, let the right ideas bubble up from all the way, from the younger population entering your organizations as well. I think that's really important to build those constructs.
Suniti.
So I think in finance, leadership is no longer defined on proper certainty or knowing it all or a sense of hierarchy. I think that leadership in finance means that there is somebody who can look at systems holistically, who can question the status quo to create value, of course, not just for the sake of doing that. And I think overall, it's not about being a commander. It's not about directing people. I honestly think leadership is also about mastering oneself, so that then you become, you start gaining respect of other people, and then you truly become a leader.
I think if you go back, leaders made it to the C-suite by specializing in one thing, and it's very much building on the themes you've heard. So you're good in finance, you were the CFO, you become the CEO, or it's very rare to see somebody who was head of strategy become CEO or head of product become CEO. So I would say a couple of things is leaders today need to be, there's a vulnerability there. It's okay not to know all the answers. Things are moving too fast for you to be omnipresent, be the oracle that has all the answers. So relying on the team, the command and control environment of yesterday just doesn't work. It's a new generation of kids that are actually making the difference. Like we've been fortunate, we've been in AGGM now for about 10 years. And when we were bought by DTCC, I had to run around and tell the guys, like, you can't run around wearing shorts and flip-flops anymore. Just wear t-shirts and wear jeans and tennis shoes, right? So it's a halfway compromise. But it's still a change, but that is the change we needed. So I would say compassion, passion, vision is what we need from our leaders today, and really not being afraid, if you will, of the unknown.
And I think perhaps as well, as young people, we're often forced to pick a direction and stick with it. But what I'm seeing when I'm talking to people at this event is that there are the ability to change now. You don't have to go into technology and stick there. You can be strategic.
You have
vice
to.
versa.
You have to.
All right, I want to do a lightning question before we get to our final question. But if you could redesign one part of the financial system to unlock innovation and access, what would it be and why?
Well, I'd like to think we're doing it right now, which is tokenizing the U.S. markets, and I think that would unlock a lot, not just for the U.S. But for the world in general. You talk a lot about capital mobility. That's what it's going to provide: the ability of being able to move collateral at the speed of the network will free up an incredible amount of capital. Payments, right? So it's going to be, and we've all grown up into it. You guys are all on your phones right now. Like the access to instantaneous information, right? That's you don't need to wait now 24 hours to move your money or wait a day to get access to your. You shouldn't even have to sell your instruments to get access to money. So, but it starts in my mind with unblocking that capital, which I view it in form of tokenization. We need to strengthen the infrastructure. We're talking about trillions of dollars, and today, for as much progress that we've made, there's still nothing out there that unfortunately comes close, and we need to continue to work together to get there. Those two things. I know you asked for one, but you got a 2 for 1 today.
It's the last day we can do that,
to be able to get that done.
Absolutely.
So, sorry, Gina, can you?
Yes, I'll repeat the question. If you could redesign what part of the financial system to unlock innovation and
Okay,
access?
yeah, got it. Sorry about that. So look, again, the same thing for me. I believe that we are redesigning the system, the market architecture already today. And I would just like to give an example of how real that is. So when I said that private markets do not have an infrastructure to be traded, and I'm saying that FinStreet has the ability to issue that, custodize that, settle that T+0 and trade it. What does that mean in terms of really architecting that? We are creating first-in-class trading rules for how private markets will be traded. So the fact that there can be agility, flexibility, and have the same strengths of the asset being private, have some sort of price floors on that is how real it is when you're architecting something. So I think, and also the fact that we are partnering with BlackRock to create such rules and getting also industry expertise from across the world to see where the inefficiencies have been and then start catering to the industry. So I think that's real.
Anisha, slightly different question for you. For the women of today, what is the one skill or mindset you think they should be thinking about right now and how they bring that to the table?
I think strategy is fun. I love strategy as well. I do a lot of it, but focus on the execution. And no matter how senior you get, have the ability to roll your sleeves up and get into the weeds. Don't try and stay at the surface, because I think things are changing and it's important that you're right in the thick of it. So don't, that also keeps you grounded and humble. So I'd say, make sure your execution is impeccable, because it's only as good as your strategy then, right? So you have to make your strategy look good by really executing well against it.
Amazing. Well, thank you so much. I've learned so much from this session. I appreciate all of you joining us today. Thank you.
Thank you.
Thank you so much.
you.